Have you ever wondered how Warren Buffett became one of the richest people in the world without creating a tech company, inventing an app, or chasing hype? What if I told you his secret weapon isn't luck or genius, but a mindset you can learn starting today? Most people invest like they're guessing in a casino, buying high, selling low, reacting to fear and noise. But Buffett? He plays a completely different game. A game built on timeless principles, calm decisions, and long-term vision. No flashy moves, just wisdom, patience, and strategy. In this video, I'm breaking down 8 of Warren Buffett's most powerful investing lessons. So clear, so practical, they could change the way you see money forever. Whether you're just starting or you've been investing for years, these ideas will help you stop chasing and start building real wealth. When Warren Buffett hires someone, he looks for 3 things: intelligence, energy, and integrity. The first 2 are common, but the third one, integrity, is non-negotiable. Without integrity, intelligence and energy can actually become dangerous. A smart, energetic person with no ethics is like giving a Ferrari to someone with no brakes. In Buffett's words, if they don't have integrity, you want them dumb and lazy. That principle doesn't just apply to hiring. It's a rule for life and business. Surrounding yourself with people you trust isn't just safer, it's smarter. People with integrity make long-term decisions, avoid shortcuts, and build lasting relationships. You don't just avoid disasters, you build real momentum. If you're building a business or a career, start with this filter. Ask yourself, do I trust this person to do the right thing when no one's watching? If the answer is no, walk away fast. In the long run, nothing costs more than trusting the wrong people. And nothing pays off like having the right ones by your side. Most investors act emotionally. They look at what worked last year and assume it'll work again. It's like driving while staring in the rearview mirror. They think, I made money last year. I'll make more if I borrow this year. That's not strategy. That's wishful thinking in disguise. And when everyone follows the same hype, prices go wild. Buffett calls this behavior one of the biggest opportunities in investing. When others chase trends blindly, that's your chance to act with logic. Because while the crowd is driven by emotion, smart investors stay focused on fundamentals. It's not about what just happened, it's about what makes sense moving forward. Think of it like this. Would you buy a house just because your neighbor's house went up in price last year? Of course not. But people do that with stocks all the time. The key is to look ahead, not behind. That's how real wealth is built, by thinking differently when everyone else is copying each other. Buffett started his career looking for what he called cigar butt stocks, companies so cheap they had one last puff of value left. It was a rough strategy, but it worked. Imagine finding a soggy old cigar on the sidewalk with one puff left, gross, but free. That's how he hunted for cheap deals. He admits it worked, but only to a point. You can't scale big wealth by picking up leftovers. Eventually, Buffett realized it's better to buy great businesses at fair prices than struggling ones at bargain bin prices. One good puff isn't enough when you want long-term growth. So the lesson? Don't just chase the cheapest deal. Ask, is this business worth owning for years? Can it grow and thrive? If the answer's yes, pay a fair price and hold on tight. That's how Buffett went from cheap smokes to premium assets. Buffett's philosophy evolved: he'd rather buy a wonderful business at a fair price than a fair business at a wonderful price. Why? Because great businesses keep performing year after year. They grow, adapt, and generate real value without needing constant attention. It's like planting a tree that keeps bearing fruit. Fair businesses might be okay today, but what about tomorrow? They can require too much effort and still disappoint you. Meanwhile, a great business, if it costs more, upfront makes life easier and returns bigger over time. It's the classic case of you get what you pay for. So instead of looking for discounts, start looking for quality. Think about the brand, the customer loyalty, the leadership. If a company has all that and a fair price, that's where Buffett puts his money. And honestly, that's where you should too. Buffett says the market is a voting machine in the short term and a weighing machine in the long term. What does that mean? In the short run, prices move based on popularity, what people feel. But in the long run, value wins. Eventually, a business gets judged by its real performance, not its hype. That's why you will see stocks skyrocket or crash over news, tweets, or trends. It's not always logical, it's emotional. The crowd reacts, not reflects. If you follow that emotion, you will ride the same roller coaster up, then down, then dizzy. But if you understand the weighing machine, you stay grounded. So here's the game plan. Learn to ignore the noise. Ask yourself, is this company actually growing? Does it generate cash? Is it stable? Don't get fooled by applause or panic. In the end, the market figures out what's truly valuable. Be the one who sees it early and calmly. Wall Street often says, this stock is risky because it's volatile. But Buffett completely disagrees. Risk, he says, isn't about prices bouncing up and down, it's about not knowing what you're doing. Volatility is just noise. Real risk is ignorance. Think about it. Would you call a car risky just because it goes fast? No, what matters is whether the driver knows how to handle it. Same with investing. If you understand the business, its risks, and how it makes money, you're not gambling. You're making informed choices. So next time someone says, this stock is too risky, dig deeper. Is it risky, or is it just unpopular right now? Because the biggest returns often come from what the crowd avoids. Buffett's advice? Don't fear volatility, fear not doing your homework. Buffett's wealth wasn't built overnight. In fact, most of it came after he turned 60. Why? Compounding, the magic of earning returns on your returns. It's like a snowball rolling down a hill. It starts small, but give it time, and it becomes massive. Most people want fast results. They invest for 1 year, panic, and sell. But Buffett plays the long game. He holds great businesses for decades. That's how 1 turns into 10, then 100. The secret isn't finding the next big thing, it's letting time do its work. So if you want to build wealth, stop jumping from trend to trend. Find something solid, invest, and wait. Compounding rewards the patient. And the earlier you start, the bigger the snowball gets. Don't underestimate time, it's the most powerful tool you have. Buffett often says, know your circle of competence and stay within it. That means invest in what you understand. Don't buy crypto just because it's trending. Don't jump into tech just because everyone else is. If you don't get it, skip it. Imagine a surgeon trying to fix a car engine. Smart person, wrong field. Same goes for investing. Being intelligent doesn't mean you know everything. The best investors focus on what they understand deeply. That's how they make fewer mistakes and bigger gains. So take a hard look at your strengths. What industries do you actually get? Where do you see patterns others miss? Stick to that lane. It may feel boring, but it works. Because in investing, the goal isn't to look smart, it's to avoid dumb mistakes. So, now you know. Warren Buffett doesn't rely on trends, guesses, or luck. He follows timeless principles that anyone can apply. The question is, will you start thinking like an investor or keep reacting like a gambler? Take a moment to reflect. Which of these 8 lessons spoke to you the most? What's one thing you can change today to align with this mindset of long-term success? If this video helped shift your perspective, even a little, give it a like and share it with someone who needs it too. And don't forget to subscribe and hit the notification bell, because in the next videos, we'll dive even deeper into Buffett's strategies that can help you build wealth with wisdom.